temporary library, the library open books so that you could, I think that's fairly awesome.
Good morning, everybody. We're going to go ahead and get started a few minutes early, if you don't mind. My name is Kevin Bielmeyer, and I am with the Connecticut Economic Resource Center, or CERC, and I'm working directly through the Municipal Services Division of CERC for the towns of East Granby and the town of Suffield, serving an economic development support role for the EDCs and the individual community development officers in each of those towns. So thanks for coming today. We're going to videotape this so that this wonderful content that we're providing this morning can be heard by even more than attended this morning, but I appreciate you coming out and joining us. I do want to point out that we do have Jim Hayden, our first selectman of East Granby. Thanks for coming today, Jim. We do have our EDC from East Granby Chair, Paul Oliva, back here. Thank you, Paul, for helping out. I want to welcome or thank Windsor Federal for sponsoring this series, the small business series that we're doing, and this is the first kickoff of that. Our panelists, before we get to them, they're curious as to who is in our group today. So since we do have such a small group, why don't I start right here on the end, and for their benefit, if you could just tell us who you are.
Hi, Bill Hawkins. I'm the Director of Planning and Development for Suffield.
Jim Burke, Economic Development Director for Windsor.
Joe Doring, Computer Sales and Repair in East Granby.
Sure, I'm Marcia Colchon from Oxy Fresh Carpet Cleaning.
Bill Evans. I'm on the EDC in East Granby.
Jonathan Matlock, Aerotech Engineering Consultants, we do aerospace parts.
Leslie Marks, My Advertising Works, small business in East Granby.
Jim Hayden, first selectman.
David Manucci, Economic Development, and also Windsor Federal.
Paul Oliva, East Granby EDC, and previous small business owner.
Thank you very much. Appreciate that. Before we get to our panel, let me just open up the series. Why are we doing a series on on small business? Well, likely you know the statistics, you've heard them, but they bear repeating that nationally small businesses employ roughly 57 million workers with an annual payroll exceeding $2.3 trillion. More than 99% of all U.S. businesses are small businesses if they're defined as having 500 or fewer employees. And a significant amount of those are family-owned and operated. And of those, they comprise 80 to 90% of all businesses in North America, contributing 50% of the nation's gross domestic product, and employing more than 60% of the U.S. workforce. You may know that in 2016, the CBIA conducted their first ever survey of small businesses. There were many key findings, some of which will relate to the topics of the series that we have this next few months. Their full report is on their website, but related to today's topic of financing were the following findings from the survey. By a factor of nearly 3 to 1, businesses expect to grow this year. This is again 2016, 38% of respondents, rather than shrink, which was 13% of the respondents, and just under half expected to stay the same. About 29% of those businesses that responded plan to take out business loans. Of those, more than 77% will take out bank loans. The rest will tap into personal savings, that was 18%, government grants, 11%, equity financing, 11%, and SBA loans, 10%. And with those stats, I'd like to introduce this morning's panel. And on my left here, ladies first, we have Christine Koster. She's the Vice President of CIC, the Community Investment Corporation. Next to her, we have Mike McDonald. Mike McDonald is an advisor with SBDC, the Small Business Development Center. And then we got Michael Granfield, the Vice President of Commercial Lending for Windsor Federal Savings and Loan. And last but not least, our owner, entrepreneur, President of JSW Media, Inc. in Suffield, Jeffrey Wazalewski. So I want to thank them all for being here this morning. And what I thought I'd do is go down the line and just let them tell you about their particular programs that they offer and how it relates to small business financing. And I think what you'll find is that we really have a cross-section of interplay here between banks and SBDC. You'll see how everybody interacts, but really each one also has a niche in this particular topic. And then we'll bring it home with Jeff at the end to talk about some real-world experience he's had as a business owner seeking financing to expand his business. So, Chris, I'll start with you.
Okay. I'm going to do my best to try not to cough. I'm coming off of a little something. But what my company does is we do community lending. So we're trying to get funds out there into the communities, trying to get to create jobs, get new businesses started, and things to that nature. Where we're a little different is where not every bank can help a new business or somebody who's starting a business. We can help them. I mean, we do ask them for projections and business plans and things, and that's where a lot of times we involve the SBDC to help them with their projections and their business plans, because a lot of times they're not really up to par. I mean, I had somebody last week hand me a business plan that was 2 pages of a Word document. It's not really going to cover what we need for, the SBA and things like that. So, and then where we partner with the banks is mainly on the commercial real estate end of things with the SBA 504 program, which allows a business to, instead of injecting 20 or 30% into their commercial real estate purchase, they get to inject 10%. And then a bank takes 50%, and we and the SBA take the other 40%. With that, they can also get additional funding in that loan for renovations. They can put the attorney fees, the closing fees, everything into those loans. And then back to the Community Advantage and the 504, the microloan program. We actually work on those ourselves, and the microloan program goes up to $50,000, and that we often use for somebody who's starting a new business. We also help existing businesses with those loans with equipment, consolidating debt, working capital. I mean, there's so many different things that we can lend them money for. And then the Community Advantage program, that borrowing can go up to $250,000, and we can also utilize that for real estate. Ultimately, it's a 7A program, which a lot of banks are doing 7A loans, on their own, which Michael, I'm sure, will talk a little bit about. But again, we do a lot of partnering with economic development, a lot of partnering with SBDC, and a lot of partnering with the banks throughout Connecticut.
All right, thank you. Michael?
Good morning, everyone. So the Small Business Development Center, basically we have a three-pronged, we're funded by the SBA out of Washington by grant, which is matched by Connecticut Community Economic Development. And through that grant, we are housed by UConn. So technically I work for the UConn Business School, but we follow some SBA and economic development guidelines for our impacts and such. So what we really do is we help businesses that are either starting or want to grow. And with that is we take folks who come in and might have something on paper, and we'll help them with their business plans, making suggestions, taking a look at them and seeing if they are bankable before we send them back or to one of our lending partners. One of those things that we use to help are a number of tools, one of which is called Bottom Line, which is a financial system where we can take numbers and do projections. And these types of things help to really see that new business, whether they're going to be going in the right direction or not. Other things we use are some marketing tools called Ibis World, which what that does is helps with market research, to put that plan together so they can move forward. Especially if we do deal with a number of international trade firms, which we use Euromonitor for, which really gives a real market research of what's going on around the world. And another tool that we use is called Growth Wheel, which pretty much it's a wheel, and we can break down and put people really on mission to where they need to be with operations, finances, sales and marketing, to really get them focused on where they think they want to go and really chart that course out. Now that's, like I said, for folks who are starting a business. We also use all these tools for people that are already in business if they want to do, per se, a financial health check of what's going on in their business. A number of the things that I can come in and do is see where, are you spending too much money somewhere? What can we do to really reduce expenses and then and really maximize your profit margin? We also do succession planning. Again, we work with the banks we don't loan money. We don't do that. We will help you put a package together and then refer you out. Now, the beauty of all of these things I just mentioned is most of them, if you go out into the market, cost thousands of dollars. We are no cost. So pretty much all we ask of you is to sign up on our website, and then you would get an advisor. In this area, it is me. I have the northwest corner, pretty much from Suffield, Bloomfield, all the way to the New York line. Like I said, all we do is ask you to sign up, and then if we help you with some impact for your business, to just sign a form that said we helped you in some way. So again, this is a program that is nationwide. Every state has an SBDC, and again, the no-cost aspect is something that I find it to be one of the best kept secrets in the business world. Is when I was running my business, I had no idea that this existed, and it could have helped us out a lot. So.
All right. Thank you, Mike.
Good morning. First, I just want to say some background on myself. I spent most of my lending career in Massachusetts. I've been at Windsor Federal for the last couple of years. I lived in Connecticut for the last 5. The fact that there's 3 economic development directors here says a lot. I wasn't used to seeing that in Massachusetts. And I'd always heard good things, particularly there was a tour, I believe, sponsored by East Granby. A lot of my Massachusetts clients would come down, get on the bus and drive around. I never liked that because we wanted them up in Massachusetts. But, kudos to you. We have a lot of good things going. Sometimes, again, as a little bit of an outsider, a lot of people tend to focus on the negative. There's a lot of positive things going on. We're very busy. Right now I'm working on, to give you a couple idea, I'm going to put my glasses on here for my notes. Got a company that is a startup. Now normally banks, we really don't want to talk to people with startups. That's what these guys are for. We say go borrow from your friend's family for 2 years and then come and see us. But now they have an alternative, so that's great. And it's the business plan. It takes a lot of time. It's hard for bankers to set aside the time, nor are we experts on that. Just because, again, we have a lot going on. It's hard for us to dedicate our time to someone who really is brand new, and that's why these resources are great. I had a person come in within the last year, wanted to buy a flower shop, local flower shop, and there's no assets there for us to pledge as collateral. She rented her home, but she had experience in the industry. Well, she got help and was able to do that, so it was a great synergy. What else do we have going on? We have a company that came to us, an aerospace manufacturer. Someone with a lot of experience ready to buy a company, a local company, good size, about $3 million in sales. Unfortunately, he found a national business broker before he found us. So he's already, once you lock in with the SBA, they give you a number, you're locked in. So unfortunately, you can't shop around for the most part. So before you sign that application and sell your soul to whoever you're selling it to, it's just shop around. This gentleman, by going to a traditional bank, probably would have saved about $90,000 a year. It's just hard to unwind. So we're working with them. We're running parallel. In the event something happens with that approval, we might be able to help them out. If not, down the road, we'd certainly be able to help them out and possibly refinance that debt. We're using a 504 program to construct a hotel locally. We're doing a large assisted living project here in the state, about a $25 million project. The local towns have been very good about giving TIFs and other tax incentives to make things work. And so without those, some of these things don't cash flow. It provides jobs and a nice tax base. Some of these, the one that I'm working on now is in more of a rural town that doesn't have a lot of economic development, so it's a real boon to them. talking to someone about a possible new winery. We're working on a subdivision. We have all, we really have a lot. I get to the end, I just want, I hear a lot of it around here. People focus on the negative, whether taxes are too high or whatever it might be. But there's a lot of companies doing really well out there, and we're seeing it. Now, could things be better? Perhaps they could, but people are making it work, and I think there's a lot of pride for people here in Connecticut. I've seen that. A lot of aerospace around here, a lot of successful companies. Be glad to answer questions afterwards. But I really wanted to get that point across. Particularly, I thank the economic development directors, and hopefully you can bring that out back to people. Because I really, every day I hear somebody complaining about the tolls. And again, I'm an outsider. I just drove my family to Florida. This was probably the only state I didn't pay tolls in as I went over bridges and that. And I'm not saying we need to balance all that stuff, but at its surface, to me, it's. Anyway, sorry, getting off the don't mean to go there. I'm just saying, I paid a lot of tolls from here in Florida, that's all I'm saying. Anyway, very excited to be here, working for Windsor Federal and in this market. Just a lot of good things happening. And on that note, I'll turn you over to one.
Yes, good morning. I'm the owner of JSW Media. I'm also a client. So we're a third-party e-commerce seller. We recently just moved from Southwick over to Suffield, which is also where I live. So not only is my commute quite a bit shorter, but we have a lot more visibility, and we're closer to the shipping services that the airport provides. And so overall, it's been a great move for us. What we do in the e-commerce areas, we focus on a couple of different product categories, including gourmet foods, military merchandise, such as hats, pins, license plate frames, and fashion jewelry. So the nice thing about e-commerce is you can do things on there and build brands that you wouldn't be able to do in a store, because no one would go into a store and understand why am I seeing fashion jewelry and military and all these other different things in the environment. So we've been able to grow over the past few years, and we've been going for about 10, but really our growth has primarily been over the past 4 years. I mean, I wish I knew or had taken advantage of some of the resources that would have been available instead of spending, the past decade, the vast majority of it just kind of hustling and not really having a plan. Because I have to say, to this day, I still don't actually have a business plan. And it would probably be a good exercise at this point to do that. So before I was a business owner, I was actually a teacher. So I sort of fell into it bit by bit, and didn't initially just used my own funds or credit cards to build my business, but I needed to take advantage of financing once we decided that we were going to move to Suffield and we were going to build over on Route 75, and that's of course where bank came in. And it's actually it was an easier process, the financing part of it. Construction will never be easy, but financing was actually a relatively easy part and far less daunting than I would have imagined. So as we continue to grow, I definitely see the need that we are eventually going to have to probably access either credit lines or other types of financing for growth. And that's just become a necessity just due to the ways that cash flow works as you grow a business. And I'm open to any questions.
So Jeff, just to continue with you since you're in the hot seat, when you decided to go from this homegrown business, online business, and make the decision to go brick and mortar, talk a little bit more about that. Like number one, why? Why did you decide to do it? And then, how, now that it's open and, you've got the construction underway, how do they sort of compare? One of the things I hope to do is encourage others. A lot of small businesses are going to come from home-based businesses who may just find it too daunting of a prospect to think about, branching out. And I hope that this panel will serve as encouragement of that, because obviously small business growth is economic growth for our towns. So if you could talk a little bit more about that.
Yeah, I mean, it's an interesting process, and I think it's one of the best things that I did, maybe about 6 years ago when I first got office space. And it was really out of necessity. At some point initially, when I started my business, we were primarily booksellers. And there's only so many books that you can store in your house. And at this point, we didn't use fulfillment centers to have all our merchandise go out to an outside facility and to do all that drop shipping for us. So at some point, it just became overwhelming. I had to get this stuff out of my house. There's only so long that, a wife will put up with that kind of thing and allow you to overrun your residence. So the way that I went about this is I didn't go from, hey, I'm going to rent office space all the way to I'm going to build this, brand new building. That would have been impossible. So the first step is I found a really, really inexpensive space. I think it was maybe $600 or $700 a month. I mean, it was cheap. It was not nice, but trying to control my initial expenses and take smaller steps was a lot easier for me in my growth process. And it could just be the way that my business grew. That was easy. I didn't have to worry about bringing in outside clients or anything else like that. I just had to worry about having a place to work that was dry, relatively clean, and then I could run my business. Our real growth didn't happen, and we didn't need more space until we started going into other product categories. And then it's just become a necessity for the way that we need to store products and also have employees and ship all our things to Amazon fulfillment centers.
Gotcha. So now the decision to have a space, but this is beyond just a distribution location, fulfillment center, it's actually retail, right?
Yeah, so the space that we built over on Route 75 was a way to get, it's really more of a lifestyle decision in terms of getting everything under one roof. So the primary focus of the space is warehouse distribution office space. We need room to operate. We have about a dozen employees, the majority of which focus day in, day out on taking products in and getting products back out. However many, a few thousand units a day kind of thing. And that takes time, that takes space, it takes a loading dock, that type of thing. There's also other uses for the building in that a front area that's approximately 2,000 square feet is going to be a cafe retail. So that's going to have two objectives. One is to provide something to that local business center in terms of things to drink and eat, which is really lacking over there, right over in that little nook of Suffield. You have to kind of cross the line over to Winslow Locks, and there's a couple options. But as far as the coffee business goes, it's Dunkin' or bust over there, so we'll see how that goes. And then the second thing it's going to do, it's going to give us a retail space, so it's going to be the cafe and retail. And we're hoping that we're going to sell some things through the store, but the primary objective is to focus the vendors that we carry and some of the merchandise that we personally have manufactured by other companies. It gives us something to show vendors that we work with that, hey, this is a venue for your products, and it gives them some local exposure. So we're really looking forward to building that out this year.
Michael Granfield, if you could speak a little bit about, you mentioned that some folks come to the bank and they don't have a business plan, or they don't have necessarily a track record of success and developed idea of what they're going to do and collateral, et cetera, that you'll refer them on. So talk about a typical client that comes in that you can directly impact and help, and then at what point if you do, and then if you can, or if you assess it, and then just talk a little bit about that referral process to our other partners.
So it really depends. We, most of the, at least the smaller banks around here, we're generalists as lenders. We do real estate. Right now we're getting a lot of people who want to flip houses, so that's not usually a good sign, so just watch out for that. It's just not something, as that builds up, in the past is everybody thinks they can make a quick buck buying a house at foreclosure. Anyway, so we do support some of that, but not, people need to be qualified. that's an aside. So we get, a lot of manufacturing clients in. They need working capital support, line of credit, and that's, pretty standard banking 101. You lend up to 80% of the receivables and a percentage of the inventory, and it's meant for short-term needs. Anything that you would amortize over a year, we'll put on a term note, equipment, certainly real estate. So that's pretty standard. We have a lot of those. I have, as I said, right now I'm looking at someone that's considering a winery. Now, they have some experience, but it's more personal. It's a big event. For us, as a bank, that's, whether it be a restaurant or a winery or golf course, something like that, that's a little out of the risk norm for a bank. We'll refer it to the 504 program. And we've had a lot of success with that. As I said, we have a hotel going on right now with that. Looking at a couple other projects. I have a gentleman who owns a restaurant, wants to expand the space in his restaurant and also buy the building that he's in. So really the only way I can do that is with the 504 program. And what it does for the bank, and I'm going to sell the 504 if you don't mind a little bit here. The bank at the end of the day has a 50% loan to value because there's a second mortgage for about 40% of the total project that is sold or provided by another agency. And it really is a home run in many ways. The customer also on the SBA sale piece gets a 20, 25-year fixed rate mortgage, which rates are up a little bit, but they're still at historical lows. So that might be a nice piece of that. Plus, I really can't do an 80% traditional mortgage on a restaurant, a golf course, or something like that. So it's a way to get there. I did a Golden Corral restaurant using that once. It worked phenomenally, and it was the only way to really do that. We get all types of requests. We get a lot of real estate requests. People that want to buy investment real estate. So yes, I won't get into a whole lot of that. It's not really the focus here today. But probably most of the banks around here, about 60, 70% of the requests we get are probably commercial real estate. Had a lot of luck with manufacturing using the 7A program, as was talked about. 7A program provides the bank a certain amount of a guarantee, anywhere from 50% up to 85%, depending on the size of the loan and some other things. Had one customer in the past, had a wonderful company, but he had an 80% concentration to who he sold to. Now, the company he sold to was a $3.5 billion corporation, and he knew the original owner, so it was a pretty good risk, but it was still too much risk for the bank. The machines were $500,000 each, and over time, I think we financed 16 of them. Almost, at least initially, to his balance sheet righted itself through the SBA 7A program. As far as referrals, again, anybody that comes in isn't quite ready, has questions, wants us. I had a gentleman recently, he's been doing this business for many, many years. He's about 10 years for retirement. It's all starting the timeline's getting short. So he wanted us to redesign his whole business and tell him what to do. I said, and unfortunately, we can't do that. That's where we asked some of these supporting agencies to help. And I referred to, and the SBA has a program called SCORE, which I'm sure you've all heard of over the years. Well, I hadn't dealt with them in many years, but went out to their website, and they actually have people you can reach out to, and they have their resumes there. So he matched up with someone pretty well on that kind of helped him guide down that path. Certainly could add more, but
Yeah, well, let me bounce it over to Mike.
Sure.
To pick up the ball on the referrals. Let's say when you get a referral, and how does that work?
Yeah, so we'll take a referral from many of the banks or lenders, and basically it typically comes down to that business plan that they're not ready to be funded. And so what I will do is I'll go through it with the client, and typically what I have seen thus far is a lot of what they don't have, because the theory of the 35-page business plan is, and you guys can correct me if I'm wrong, but they don't want that.
Right.
15 pages max, and some folks are way too far over, and then some are not enough. And one of the major things that I've seen is that they don't put their experience. And one of the downsides of people coming in and they want to start a business is they woke up one morning and decided, oh, I'm going to open a coffee shop. Well, they don't even know how to make coffee. So those are, it's really sitting down with that client and walking them through vision, mission, why you're doing, what is that vision for your business, and focusing them in on putting it on paper, and then really understanding what the market bears, really. And that's one of the things we help with some of our tools is, you know, we have one tool we use that can help with demographics, radius of demographics of where they're going to be. All right, it shows, you know, because my clients range from a jam company to a medical center to breweries. I mean, I'm all over the board, so I'm dealing with different organizations, and so anyway, from all different industries. So basically, when I sit down, we spend meeting after meeting focusing in on just building that plan, putting everything that needs to be in there, what doesn't, take it out, and then looking at the numbers and seeing if, because let's face it, projections are projections, right? But if they're legitimate projections, and once that package is together, we throw them back to whoever referred them to us. One of the benefits that I feel that I brought to this position is I've run a business. I was in the contract security business for 20 years. I've helped build multi-million-dollar national and international companies, the last one being one of my own. And I understand because we started with nothing. And going back to like, when do you expand? And so we started with nothing, just really a piece of paper and like 2 clients we happened to have. And we took that, and what I do is I show with people is, especially because a number of folks have this grand idea of, oh, I'm going to make millions. This is a great idea. We're going to make millions. I back them up, and it's really that hub and spokes model that I use. It's just focus where you are. Let's get it up and running, and that's what we did. We were in Miami. The business was in Miami. We started in Miami. We went Dade County, Broward County, West Palm, and then just built from there to doing business all over the country. So those are the things that I really try to focus in, get people to focus in on. If we move over to existing businesses, the biggest issue that comes is our employees, how to hire people, and that's a tough road. I think everybody that's in business finds that problem, and that's probably the number one issue that we're dealing with. And one of the things that I typically bring it back to is, you know, do you know your culture? What is the culture of your business? And again, if going back to the startup phase, that's another thing that I really drill in. Know what the DNA you want to put into that business is, so you'll cut down the problems as you grow and bring people in, because a lot of folks get to this point where, and it's nothing, it's not their fault. They've worked hard, they've developed a product or a service, and they're doing it, they're working 20 hours a day, they're moving it along, and all of a sudden you hit this wall of, oh my God, now I need people. And the transition from basically that product development person to market turns in, you have to pivot into that sales piece / manager piece. And if you don't have that culture, that DNA already instilled, you could have some problems when you bring people in. So those are just, you know, I think I just kind of went off on a whole different topic.
Well, it's actually a topic for our third session is going to be hiring. So we are going to focus on that, because you're right, it's obviously a big challenge. And something that, Jeff, you've gone through, because you just said you had 12 employees. Yeah. So you've gone into that. So
no, and it's true. And sometimes that happens. You know, sometimes people want to hire somebody, but they don't think the whole process through. You know, how much would I have to increase my revenue to pay that salary? That my workers' comp is going to go up. You know, all those things, and that's where Mike comes in and kind of breaks it down for them. And we try to do that too. You know, that's part of what our company does too. We do a lot of consulting and things like that too. But Mike, they get a little deeper in the consulting than we do. But it's sometimes people don't think it through, and we kind of have to.
Since we do have such a strong manufacturing, especially right here in East Granby, could you talk a little bit about in terms of the lending and the loans, because some of it is equipment and there's different thresholds, but I know quite a bit of what CIC helps with is equipment purchases in addition to obviously real estate. Could you just touch on that a little bit?
Right. Again, new equipment can help help a business, their production be more improved. Again, it can offer another opportunity for employees, that you can bring on to operate that new equipment. So we do quite a bit of equipment financing. Again, could go into both of those programs we talked about earlier. If the equipment's under $50,000, we'll put it in that first program. If it's over that, we'll go into the Community Advantage program. So they both have, very fair rates and very fair fees. And, depending on the life of the equipment, we have to kind of look at that. So like a forklift lasts forever, so we could easily do a 15-year note on a forklift. But if it's something that only has a lifespan of about 5 years, we're going to have to keep that at a 5-year note. So that's something to always remember with equipment financing, that it has to be within the lifespan of the equipment itself. So
before I open up to questions with our guests, our audience, can I just ask you about soft costs? So, obviously we've talked about real estate, we've talked about equipment, but there also are opportunities to roll in some of those other closing costs into the loan process.
Right. So again, with the 504, where we partner with banks, such as Michael, we can put the attorney fees, the closing costs and all that can go right into the financing as long as the appraisal on the real estate is enough to cover it. And most of the time it usually is, we do that quite frequently. So that's where somebody doesn't have to, oh gosh, I can't afford, I have to lay out another $2,000 for an attorney, or I have to lay out another $2,500 for, for an appraisal. We can put all that into the financing. So that's a good thing, that we can, help out, so you're not taking all your capital and putting it into the project, so you can still hold on to your capital.
And one thing we haven't mentioned, and maybe people know this, in that program, one of the beauties of it is that the customers, again, it's going to be owner occupied, but
Correct.
It's 10% down. Banks are always going to require at least 20. It's 10% in most cases. If it's there's a couple categories where you need to put more, but that's a big selling point for that as well. So you can take that, if you have 20%, the other 10% go into the business rather than into the real
Hold
estate.
on to that capital. Right. Yeah.
Paul?
Yeah, I hate to be the first one to ask the question because it's probably a dumb one, but for us older engineers and things, you mentioned all of these, I think, at least once or twice, the 504 program. Could you at least give us an overview of what that actually is? What is the 504 program?
Okay, yeah, the 504 program is it's an SBA 504. It's designed for real estate, commercial real estate. Again, we were saying owner-occupied commercial real estate. So you can rent out part of that building, but you have to occupy 51% of it with your business. So many times people will buy a building and rent out part of the building, and that kind of helps pay their mortgage. Again, terms can be 25 years, like we were saying earlier, and it's 10% down, and then a bank takes 50% of the loan, and then we take 40% of the loan. So it enables a bank that perhaps maybe can't finance the whole project because, again, they want to get money into the community too, and everybody's got limited money to get into the community. So by spreading all of our monies around, and partnering, we can, get money into the communities and get money to business owners and get these the real estate purchased.
So the 504 is only for real estate.
504, right?
No, well, actually, no. It's equipment as well.
Yeah, the equipment can be in there.
The
Yes.
cost involved, it's actually a debenture, so there's some costs involved that you're not going to do it on a smaller transaction.
Right.
So they generally say $1 million or more. Is that fair?
No, we do. We do some that are 250,000. So
All right. But it has to make sense. The fees get rolled in for the most part.
Right.
But I've definitely done equipment, again, with the customer with the concentration, where I couldn't give him $500,000 for a piece of equipment because he only had one customer. If he lost it, I'd own a machine. I needed some support. I didn't want that machine.
Right.
So it is for equipment, but larger piece of equipment. But you see it, 75% of the time for real estate.
Real estate, right.
Can you roll renovation costs into that
Yes.
transaction? Okay.
Yes, absolutely. Yes, so renovations can go in there as well.
And again, just to recap a couple of the benefits on the secondary piece, it's a fixed rate for an extended period of time, whereas the banks are probably only going to give you a 5 or 10-year fixed rate. Also the amortization, so the repayment tends to be longer as well because the bank's in at a 50% loan to value. It's really a win-win-win. One, for me as a banker, she does all the work. I don't have to do that, so I can go on and try to find my next deal. And you're experts at it, you do a lot of them. So whereas I as a banker, if I'm picking one up every 3 months, invariably it would be a slower process. So it really, all the banks around here offer this program, and one of the things the banks sometimes don't like is that we don't get all the outstandings because we sell part of it off without compensation, basically, is what happens. But on the other hand, our credit quality is much better, our customers better served. There used to be a time they used to say you could actually sell that piece. I think that's frowned upon now, where if your rate was, went the other way, you could actually make money on the debt, but I haven't heard that lately. Does that help?
Absolutely.
Great.
Another question? Jim?
Oh, you mentioned hiring employees as a major issue. What other problems do small businesses come across that need to be addressed?
Well, I think I can help with that a little. I mean, human resources as a whole is definitely an ongoing hassle, for sure. And definitely hit home, talking about culture and trying to set a tempo that people can operate under. So I found that the biggest thing with employees, and this carries over to other areas, is just building systems. So structures that people can go by and they know how to operate independently with as little intervention as possible. So building systems. So if we're talking about a system in my business, we have a human resources system that we try to operate under. But then we also try to go with every other facet. So inventory is a huge concern for us, just in terms of make sure that we don't have too much of any particular product, that we have anywhere from a 30 to 60 day coverage. We don't like to be beyond 60 days. We don't like to be under 30 days because we never know what's going to happen with, let's say, the economy or a certain product, or even the effect of tariffs on some of our manufacturers. Those can have a little bit of a struggle. So we try to build systems in that for inventory management. And then I would just say the other thing that's hard is, and I should probably seek out help on some of these things, but you have to be at least an amateur, somewhere between an amateur and an expert in a lot of different categories. So all of a sudden, then you have to deal with, okay, now I have this building, now I have a different kind of insurance that I need. Now I need to figure out what does even an umbrella policy really mean to me? And you have to constantly ask yourself as you're doing all these things, because I'm a little paranoid, I'm like, am I being scammed? If I already have insurance, why do I need umbrella policy? So you have to learn about a lot of different little categories and try and seek help. And honestly, I'm not sure what people did before Google. They must have had a network or something.
And I'm sorry. So again, I spent most of my career in Massachusetts, and most of the rules and laws are the same. But the one thing that I've taken away in the last 2 years is the cumbersomeness of the Connecticut Transfer Act, the DEP. I love clean everything, but it takes a long time for customers. It costs them a lot of money to transfer assets that are subject to that. And I really, for those of you out here who have people that you can talk to that at least give them some feedback, we've seen a lot of business halted or corrupted by, again, there's a fine line of what's required, but I think at this point someone needs to look at that and review whether what's in place is really appropriate. I'm hearing estimates, and I won't get into any details, it costs over $100,000 to go through the process. Things are generally good, and those of you out there that are experts at it can correct me if I'm wrong. Again, I'm 2 years in Connecticut. But I had a customer here in Windsor Locks been trying to buy his building. It's a body shop. Been trying to buy his building for 5 years. He's been in the building for 20, and he's already $100,000 into environmental attorneys. And I think the site's clean. So that I've seen that on numerous occasions. It seems to come up a lot.
I've also experienced it on the auto body side too. So
I recently can I give one more example?
Yeah.
We had a customer trying to buy a business in a leased building was not buying any real estate whatsoever, but it was determined to be subject to the Transfer Act, even though there was no real estate going through. And we didn't expect that. It cost a lot in legal fees and will cost a lot over the next couple of years to do all the testing and stuff. And again, it's a multi-tenant building, so I'm not even sure how that works. It's office retail. But hopefully over the near term, someone could take a look at that at the Connecticut government and just review it to make sure it's reasonable for businesses.
Just to hit on to, you mentioned, basically processes, and one of the things when I've seen when you're starting is you just want to get this thing out there, right? So SOPs are very important on being just having your standard operating procedure set in stone, and sometimes I see people just jumping over that, and that's just one of those things you really want to have set something that goes back to culture and all those things. And you do have to be a generalist, and beyond having some idea of insurance. I mean, I just remember I had to learn legal, HR, operations. I came from ops, so that one I actually knew. Really, sales and marketing, and overall as the business owner, as running the organization, because at first you don't have maybe the resources to have. I mean, I always say you do have to spend some money. You have to get a lawyer, and you should have some type of accounting. But as you grow, you don't always want to send those things out, so you have to have a general knowledge of pretty much everything. We were lucky that we were blessed to be able to grow and be able to hire people to do these things, but at the same time, you do need to know what they do to a certain extent. I'm even looking at years being in security. There are segments of the security industry that I didn't know that well. To me, loss prevention at one point was really a person in a suit standing at a door saying hello, goodbye, just keeping an eye on things. Well, loss prevention overall in certain areas like your Macy's or Targets or H&M's and such are plainclothes folks looking for shoplifters and then stopping them after they've stolen. So I did not know that piece of business, which I had to learn. A challenge of it is not all clients are good clients, and I've spoken a number of my folks that I've worked with. Sometimes we sit down and say you have to look at your client base, and some people are, I just want to have clients, and that's great. If you want to drive revenue, that's fantastic if you're looking to sell your business. But if you're looking at it based on profit and what you're really expecting to get that, sometimes a client that you're breaking even on this client, it's not worth it. And we've had over my experience a number of clients that we had to take a look at and say, you know what? It's great that we have them on our list and we can say we do so-and-so, but what are they really providing us? We're breaking even, and again, my business overtime is like, that's the deal. I mean, there's always overtime. So even if you were breaking even on paper, once you calculate overtime in, you're losing money. You don't want those clients, and you have to be able to look at that sheet and just see what the numbers are to say, you know what, is this worth my time, effort? Because other things obviously go into that cost, your staff time, all of those things, and I can think of a handful of clients that we were doing that just weren't giving us bang for the buck. So one of the things that I try to focus on when that challenge comes up is, are you really profiting off of this client? And if you're not, you have to pull the Band-Aid. And one of my quick suggestions is give them a rate increase. Because if you decided you're going to get rid of if you decide it's not working out, it doesn't hurt to throw a rate increase at them. If they bite on it, fantastic. You can keep them, you move forward. If not, you're going to get rid of them anyway. It's a win-win. So that's just sort of one of those challenges that, with a number of folks that I've worked with, is just digging down to see what really, clients don't always equate to profitability, and just really getting a business owner to start thinking that way instead of, I just got to bring everybody in. Right.
Or for that matter, a line too. Like I recently referred something over to one of your colleagues because it's in a different area where he's struggling. He's an established business and he's struggling, so he needs some help. And right away he's like, well, I was thinking about getting rid of this line. And I said, well, why did you select that line? He goes, well, I just figured because that was the line I added after this other line. So really that's not always the right decision. So now, we're kind of trying to help him really look at the numbers and see, is that the line you want to drop, or is it still worth keeping that line? Again, it could have something to do with a couple of the clients that he has, selling that line, where maybe, again, he doesn't need those clients anymore. So.
And that's also a drive into getting the mindset of you do have to pivot at some point. I mean,
Right.
I have a client that has 2 different lines per se,
Right.
and one is doing incredibly well, the other one not so much. But this client is focused on the other one, and I say, no, put your time and resource. This one's making money. This one is hot. You can come back to, don't get rid of it, but you can. But it's just sometimes you can't break. As that business owner, you have to be able to recognize that sometimes you have to pivot, and because this one's going. So you put the resources and time in this to grow it, and then you can come back to this, and at that point we can really dig down to see what the problem is. But that's that mindset of when you're set on one thing as running an organization, you have to be willing to recalibrate.
Right, because the answer is not always more financing, and that's where it comes in. Right away people say, oh, I need more financing because I need money to run this division of my company or things like that. And that's not always the solution. You don't want to put people so deep into debt that their business is going to fail. I mean, we want them to succeed. We don't want them to fail. So that's where we kind of all work together, to get these businesses to be, successful if they're established, and also when they're just starting, to get them to be successful and get them to be bankable. When they're not bankable in those first couple of years, we want to get them to be bankable, and then we want to get them over, to Michael and have the bank take over the financing. So that way we can take that money again and put it back into the community. So that's why we look to try to do, even though we give them longer terms, but it's great when it's short term because we can get that money back into the community if we get them over to the bank. So that's part of our goal, is get them to be bankable. So.
Excellent. We just have a few minutes more, and before I ask another question, is there any other questions that anybody's got on their minds? The idea that somebody comes from, we talked a lot about the inception or the beginning of seeking financing and getting going. But Chris, if you could, and you could use Stony Creek as an example, an example of somebody that has had success and then they come back and then they borrow more and have additional success and building upon that.
Sure. I know a little bit about Stony Creek. One of my colleagues is working on Stony Creek Brewery. But again, that's somebody we did the financing for years ago, got them started, as well as some other breweries in Connecticut as well. And now they're coming back because they need to expand. So there's a perfect example of when you do come back, it's justified, to do this expansion. So again, unfortunately, I'm not directly working on the loans. So
but it can be exponential. Yeah. You can. It's not like a one-time.
No, absolutely not. I mean, we do repeat financing for multiple people. I mean, I saw somebody actually last week who is borrowing just a small $15,000 for a piece of equipment, which is going to speed up his production, and that's why he's adding this piece of equipment. And while he was filling out all his paperwork with me, he said, can I pay this off early? And I said, yeah, absolutely. He has a 5-year term. I said, yeah, there's no fee for paying it off early and things like that. And he's like, okay, so if I do that, but can I get another loan in like 15 years? I said, sure, if you qualify. He's already thinking about the next piece of equipment, with his financing. So absolutely, we do a lot of repeat business as well.
Great.
For established.
So Christine, is your company, is that a private company that you are?
We're actually a nonprofit corporation.
Oh.
Yeah, so we are a nonprofit.
And on that nonprofit side, and the name community is in the name.
Yes.
And you mentioned about putting money back into the community, and and having people be financially successful and paying off their loans to then allow
jobs, things. Right.
So talk just a brief moment about that mission part of CIC.
Yeah. We've been around for over 40 years as a nonprofit corporation. We do have a board of directors. We do get money from different sources. We get money from multiple grants per year that we apply for. And then we take that money and we get it again, into the communities. There's even some programs where, for example, like job creation programs, where you can borrow the money and part of the note will be forgivable as long as you create whatever the job requirement is in there. So, for example, I have one who's actually just about ready, and she's going to have a $40,000 is going to be, forgivable on her financing because of creating the jobs that was part of the program that she selected. Again, we talked a lot about 504 and Community Advantage and microloan program, but there's a lot of other little grant programs and other things that we have in certain areas of the state, which changes quite frequently, where there's economic development money that we can get out there. There's money that's geared just for manufacturing companies. There's money geared, so there's all different buckets we have to work with. But so that's basically what we do. We try to find the right bucket and the right, whatever's right for the prospective borrower too. It's very important to us.
So let's just go down the line at the end, and now just let everybody know, how do they get in touch with you? What's the best way to find out more about, in this case, CIC, and get a hold of you directly?
Yeah, you can actually go to our website. All of our contact information is there. I did bring some cards if you want. If you want to send me an email if you needed any additional information, I'll be more than happy to get it to you. So, but it's Community Investment Corporation. You just Google us, we'll come up. So.
Same with us. Our website is www.ctspdc.com. Where my contact information. I have cards also that I can give out. But yeah, if you would go to the tab for our team, I come up with my information on there.
Good. I'm sure you know how to find Windsor Federal. We're in most of the communities around here. My desk is right there in the center of Suffield. My kids are about a mile from there, and I live 2 miles down the road, so you're probably going to find me over there most days.
JSWMediaInc.com. I have a few cards on me. Get in touch anytime.
I'd like to thank the panel. If you join me in thanking them. Our next session is March 19th. It's at 5:30 at night, 5:30 to 7. It's going to be at the Sunset Tavern at the Suffield Country Club, and the topic is going to be marketing for the small business. One of our panelists is actually with us today, Leslie Marks, and she's with
My Advertising Works.
My Advertising Works. She's going to be one of our panelists, and then the following month, we're going to have a third one at the Copper Hill Tavern on April 16th, also 5:30 to 7, and that is focused on hiring, which we've talked about a little bit today, and also technology for the small business. And we've got a robust panel for that as well. So thanks everybody for coming and your attention. And Paul?
I just want to mention thanks to Windsor Federal Savings for sponsoring the whole program. But for the next two programs, they're in the evening, not in the morning.
That's right, the next two.
There will be hors d'oeuvres served at no cost. There'll be a cash bar. Thank you, Windsor Federal. We appreciate it.
That's right. Our sponsor for the whole series, Windsor Federal.